Good morning, it's Jonathan Barrett with the week ahead report, the war report. This is a report where we look at what's happened on the weekend last week, look for some recurring themes in the markets, and also go through some of the economic data, some of the data which we think is quite good. Welcome to the week ahead report. Obviously, last Friday was quite a big data night, particularly in the States where we had that employment and unemployment. Not a very good rate across the board. That employment rate moved up to 9.1%. A little bit bearish. Also, non-farm payrolls weren't that encouraging as well. Non-farm payrolls came in at plus 54, where the market was looking around plus 200. As a result of that, equity prices took a little bit of a slam. Commodity prices very mixed, and the US dollar obviously under a lot of pressure. And that's an interesting point too, because whilst that US dollar remains under pressure, by default, commodity prices move higher, further choking off the ability for these economies to actually clear profitably. So I think we are in need of a policy shift there in order to help stimulate it. Either that or we have QE3. But I think this time round, if Ben puts out a QE3, that's going to be a little bit bearish as well. The market's just going to conclude that things aren't that good. And the only thing I think that's keeping the market together is, in fact, that ability there for people to be quite optimistic and confident about what's happening. But I think that might slowly change. Okay, let's have a quick look at what's happening out there. Just have a little bit of a regroup in terms of what the market did. And there we go. It's just coming up now. And obviously you can probably anticipate the Dow was down a little bit. There we go. The Dow was down 97 points. 12,151, the S&P was down 12, the Nasdaq was down 40. The Euro was up, Euro's top 50 was up 6, FTSE was up 7, and the CAC was up 0.81. The DAX was up 34. Our local market closed down 33 at 4,547. We'd probably expect that trend to continue for the foreseeable future. And in fact, I'll have a look at one of the charts there so you can have a little bit of a good look at it. As we mentioned, those currencies certainly under pressure. And, you can see that Euro 146.40, the pound 164.27, dollar yen down to that lower end of that range, 80.28. The Aussie, big move, 107.39. Whether it's justified or not, which I don't think it is, but certainly it's the fault of that US dollar. Dollar CAD 97.73, dollar Swiss 83.47. You can really get a good sense of what's happening with that dollar just by looking at the dollar index. That dollar index has in itself come under an enormous amount of pressure. There it is there, and you can see by just looking at that chart that we're starting to right at the lower end of that barrel. Chances are I think that it can actually trip to that lower end before finding some support. But it tries and then fails, and that's the line of least resistance at the moment, is just to put on that trade and add to those positions that people have short dollar. Okay, let's now have a look at just some of the other things, some of the other markets. Just a quick run through on, the commodity space, and as you can see, it's quite interesting what's happened there. And as you can see here, just looking at the crude oil, 115.84. West Texas was down 18 at 122. Interesting that the crude market did not trade higher as high, but did come under pressure down at 98 area. When that US dollar started to fall out of bed. Natural gas also down quite a bit there as well. We are out of that natural gas warrant with some good profits. Okay, and having a look at the softs, as you can see, corn down 12, wheat was up 4, soybeans were up 7.5. We're still along that soybean warrant there, so quite happy about that at 14.14. Quite nice there. I guess that looking at the copper up 5, gold was up 9.7, and silver still having those effects at 36 and 19. Quite an interesting thing across the world at the moment, because as I mentioned, we are seeing those commodity prices by default moving higher when in fact they shouldn't be. And it's clearly the case that employment's not working because no one sees these profits. It's all reflected basically in a weaker dollar, and the supply-demand scenarios there aren't really following, or the prices aren't following proper supply-demand scenarios. Quite interesting. Okay, let's have a look at a few of the charts, and I guess the most important ones there. We've looked at the dollar index. Crude, you can see it's bouncing around a bit. Let's just have a look at that hourly chart. That's bouncing around quite a bit, and There it is, just there. Look, I expect it to be down here, 90, but let's see how that unfolds, but quite aggressive at the moment. We do also have obviously OPEC coming up, and don't expect too much change there. The other one market I want to look at is obviously what's happening there in the wheat market. There's a lot of drought going on, and the winter crop's not that good in terms of quality. And also we're seeing that 50-year drought in Europe, the driest areas in 50 years. We're seeing the 100-year, century-old drought in China doing the same thing. And I think that wheat price is set to trade higher, possibly upwards of 15%. So happy to remain along those particular markets. Let's have a quick look at the SPY. We've covered some of the commodity markets, that's fine. Let's have a quick look at the SPY, just so we can get a bit of a handle where we think that's going to go this week. Here we are, 4,548. I think expectations are for that to continue to trade lower. And it's just loading now. Right, there we are there. You can see here 4,200 is probably the best area to buy it, if in fact it gets down to that area. That to me is the safest bet. And that also represents reasonable support. But at the moment, expect that it'll probably test this support here. After that support breaks, then it's down to that area. But as we can see, the big range, big picture, 5,000, 4,200. Look for either one of those areas to try and trade it. Okay, now let's have a look at the economic calendar. The most important things here, TD inflation today. There isn't a lot of data out in the States this week, so the market might technically trade, and we certainly do need some good data. But as I mentioned, TD securities inflation on Monday, Tuesday NAB consumer confidence, factory orders in Germany will be widely watched, but that's pretty much about it for Tuesday night. Wednesday, Westpac consumer confidence, and as you can see, there's not a lot there as well. Coming into Thursday, unemployment on Thursday, that's a big one for Australia. Let's see what happens there. Expected a reasonably positive, or hopefully a positive number. I mean, that's effectively what we're looking for. Full-time employment there is meant to be down a bit, but I'd like to see participation rate up. But if in fact we get a negative number, it'll only conclude what we've actually thought about primary inputs. Initial jobless claims, trade balance, etc. That's all there. Nothing too major. And of course Friday, German, we have CPI data, and PPI in Great Britain, and import prices in the States. So that's pretty much about it in terms of what we're looking at this week. It's a bit of a tough market to trade, I'm afraid, and we'll just have to wait and see some of these trends unfold. But I think the theme at the moment is that the US economy is not as strong. But when we look in, we feel it's a weak economy, but the Americans looking out are very confident. So I think that to me is an important thing, and if that continues to uphold, then who knows, they might be able to weather it well. But at the moment, expect weaker prices, and probably expect things to trade a little bit lower this week. Well, that's it for me. Have a great week, and we'll talk to you later. Bye for now.